A strong credit history is essential for anyone looking to obtain a loan, credit card, or mortgage. It is a record of how responsibly you have managed credit in the past, and it serves as a predictor of how likely you are to repay a debt in the future. A good credit history can help you qualify for lower interest rates and better terms on loans and credit cards. In this article, we will discuss some tips on how to build a strong credit history. Pay your bills on time. The most important factor in building a strong credit history is paying your bills on time. Late payments can have a negative impact on your credit score and can stay on your credit report for up to 7 years. Set up automatic payments or reminders to ensure that you never miss a payment. If you do miss a payment, try to make it up as soon as possible and contact your creditor to see if they can waive any fees. Use credit cards responsibly. Using credit cards responsibly can help build a strong credit history. One way to do this is to keep your balances low. Ideally, you should aim to keep your credit utilization rate below 30%. This means that you should not use more than 30% of your available credit at any given time. For example, if you have a credit card with a $1,000 limit, you should try to keep your balance below $300. Another way to use credit cards responsibly is to pay your balances in full each month. This shows lenders that you can manage credit responsibly and can help improve your credit score. Monitor your credit report. Regularly monitoring your credit report can help you catch any errors or fraudulent activity that may be negatively impacting your credit score. You are entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once a year. You can request your credit report at annualcreditreport.com. Avoid opening too many accounts at once. Opening too many accounts at once can have a negative impact on your credit score. Each time you apply for credit, the lender will pull your credit report, which can result in a hard inquiry on your credit report. Too many hard inquiries can lower your credit score. Instead, focus on opening accounts only when you need them and spacing out your applications. Keep old accounts open. The length of your credit history is an important factor in your credit score. Keeping old accounts open can help you maintain a longer credit history, which can improve your credit score. Even if you no longer use an account, consider keeping it open, making a small purchase every few months to keep the account active. Diversify your credit. Having a mix of different types of credit can help improve your credit score. This includes credit cards, loans, and other types of credit. Lenders like to see that you can manage different types of credit responsibly. However, do not open credit accounts that you do not need just to diversify your credit. Pay off debt. Paying off debt can have a positive impact on your credit score. If you have a high amount of debt, focus on paying off your balances as quickly as possible. This can help lower your credit utilization rate and improve your credit score. Work with credit counseling services. If you are struggling with debt or managing credit, consider working with a credit counseling service. These services can help you create a budget and develop a plan for paying off debt. They can also work with your creditors to negotiate lower interest rates or payment plans. In conclusion, building a strong credit history takes time and effort. Paying your bills on time, using credit cards responsibly, monitoring your credit report, and avoiding opening too many accounts at once are just a few tips. Limit credit applications. Limiting the number of credit applications you make can help you avoid hurting your credit score. Whenever you apply for credit, lenders will pull your credit report, which results in a hard inquiry. Too many hard inquiries can make you look like a high-risk borrower and lower your credit score. Limit your credit applications to only those that you need. Don't close old accounts. As mentioned earlier, the length of your credit history is an important factor in your credit score. Closing an old account shortens your credit history and reduces your available credit. This can lower your credit score. If you have old accounts that you no longer use, keep them open. Make a small purchase every few months to keep them active. Be careful with co-signing. Co-signing on a loan or credit card can have an impact on your credit history. When you co-sign, you are agreeing to take on the responsibility of the debt if the borrower defaults. This means that the debt will appear on your credit report, and you will be responsible for making payments if the borrower cannot. If the borrower misses a payment, it will negatively impact your credit score as well as theirs. Be sure to consider the risks before co-signing for someone else. Be patient. Building a strong credit history takes time. It can take several months or even years of responsible credit management to see a significant improvement in your credit score. Be patient and consistent in your efforts to improve your credit history. Over time, your responsible credit management will pay off, and you will be able to qualify for better credit terms and lower interest rates. In summary, building a strong credit history is essential for financial success. By paying your bills on time, using credit cards responsibly, monitoring your credit report, avoiding opening too many accounts at once, keeping old accounts open, diversifying your credit, paying off debt, working with credit counseling services, limiting credit applications, not closing old accounts, being careful with co-signing, and being patient, you can improve your credit history and increase your chances of obtaining the credit you need on favorable terms.